Good morning, everyone. My name is Michael Naidrich, and I am the co-CEO of AmeriVet Securities. And as always, I am joined by my partner and dear friend, all things Fed rates and liquidity, Gregory Faranello. Hello, Mr. CFA. How you doing?
Good afternoon, Michael. How are you?
Uh,
I'm good.
I'm good. I'm excited. I know it's heading into Labor Day, and things are should be quieting down. But with Jackson Hole upon us, I thought when you reached out to me, I thought this was a great idea, and I was actually really enthused. And I think my enthusiasm was overmatched by the market's enthusiasm. But we'll get to that. So let's get right into it. Give me the quick Jackson Hole overview if you can.
Yeah, I would say it's interesting because fairly long speech. I mean, some of these speeches are short, some are long. Certainly, this will be Chair Powell's last. He's done eight. It tended to lean on the longer side. Market sentiment heading in, I think, was slightly bearish in terms of potential rate cuts. But I think what he laid out in front of the market, and we're seeing the market's reaction right now, is that he is definitely highlighting downside risks to the employment market. And it's interesting because he did that at the July meeting as well. So I don't know that it's a big surprise, but certainly I think the market was a little nervous that he could lean more on the hawkish side. And I think, in fact, he leaned on the dovish side, also saying at the same time that there are risks to inflation to the upside, but they could be temporary. So coming more in line, in my view, with the dissenters at the July meeting, Governors Bowman and certainly Governor Chris Waller.
Yeah, it's pretty fascinating just to see how quickly the sentiment changed. And I think, after his speech, a rate cut in September went, significantly higher percentage wise, obviously based on what he was saying. So if you can you break down the tension between the Fed's dual mandate, between maximum employment and inflation?
Sure. I mean, this is something, as you know. I mean, you read our stuff every day. We've been talking. We thought he would talk to that point today, which he did. And what he means by that is the Fed obviously has a dual mandate: maximum employment and price stability. Sometimes those mandates are in tension with each other. So what the chairman was saying is, there are risks and upside risks to inflation. I think if anything, if you look at inflation, we could be trending a little bit more closer to 3% than 2%. 2% was not on the table today. And at the same time, we have an unemployment rate that's still fairly low, but there are risks there. And the chairman spoke about that we have lessening demand and lessening supply at the same time, the risk being to the employment market at this time. So that mandate is certainly in tension right now. I think the market is aware of that. What I heard today from Chair Powell, though, is they are certainly, and the committee, in my view, certainly a little bit more concerned about the employment market here.
Yeah, that makes sense. So, we touched on it briefly in the opening, but I think it's worth diving back into. Well, let's talk about the market reaction. We're up 2% here. It's basically erased the losses of the last three or so days that we saw in the marketplace. To me, that indicates a little bit what you were alluding to, is that people were a little hawkish and a little offsides going into his speech, right? Because that it's sort of a you know, pretty massive, rally here today. Now I haven't seen the complete volumes yet, and it's still a little early in the day to check that out. And it is again, the end of August. But what's your reaction to the market and its reaction?
Well, rates are ripping lower here. I mean, there's no question about it. For context, I think if you look at 10-year rates, though, we're still within the local range. 10-year yields right now in and around 4.25. 420 is sort of the lower end of the local range. 440, 450. So we're still there. The curve is steepening, which we've certainly favored. And on the short end, to your point, Mike, earlier, I mean, we're starting to price back in. We were taking some froth off this September meeting. We're starting to price some of that back in. On the equity side, I agree with you. I mean, volumes are down. I think they're down 50% plus here late in August. So take it with a grain of salt. Markets are making all-time highs. But look, if we have good policy coming out of Washington, which it seems like we do, if we have continued good policy coming out of Washington, if we focus on the supply side of the economy and keep inflation tame, and the Fed is able to bring rates down at the same time, we're looking at, a good back end of 2025, and we're looking potentially, I think, at a great 2026.
Yes. So I'm not going to try to get ahead of our preview for September, but I'll ask you the same question, in a few weeks, but I'll ask it to you now. If you had to put a market out for what's going to happen in September, is it just 25 and we looking to move forward? Is there any chance of 50 or?
I don't think so. No chance of 50. I mean,
Okay.
what I heard from, and look, this is still Chair Powell's committee. We know there are going to be changes at the Fed, and it's very dynamic. We see the headlines every day. What I'm hearing from, and what we've also been advocating, he said, look, I think we're moderately restrictive. So that tells me that, he feels they have some room, and I do as well. But I think this will be a gradual approach and a wait and see approach along the way. So we do think they'll come down 25 in September. We get that employment market, that first week is September after Labor Day is going to be key. We get the PCE next week, week from today. So, but I don't see a jumbo rate cut really in terms of what I'm listening to, not only from Chair Powell, but the rest of the committee. So I think it's doses of potentially 25. And by the way, at their June summary of economic projections, they had 2 rate cuts priced in for 2025.
Yeah, so I guess we're on pace for what they were saying in July. Let's talk about potential replacements. We're hearing as many as 11 names. I think we're focused in on 2 or 3 now. Again, I know you're very big on independence and making sure it's not just a sort of extension of the White House type pick. Where are you handicapping this right now?
Yeah, look, I mean, it's tricky. I mean, of all the 11 candidates, and I do know some of these candidates personally, they're all great candidates. They all bring different skill sets to the table. What I would say is, the Fed as an institution, it's not just monetary policy. It's not just someone coming in with a view on rates. There's administrative work, there's regulatory work. You've got to work with Congress. So the skill set to me, in terms of being a Fed chair, is pretty diverse. It's much broader than just saying, I think rates need to be 150 basis points lower. So I would still handicap it to a small group of names. We've preferred Fed Governor Waller. We think he's a great choice because he's a sitting Fed governor. And, certainly Fed Governor Bowman, who's in charge of supervisory right now, another great choice. Former Fed Governor Warsh, I think, is certainly in the mix. So, ultimately, it's going to come down to who the president wants. Secretary Bessent has it out to 11. And I think, look, I mean, I think that's wise, right? You want to broaden the scope of who you listen and talk to and come to the right conclusion. But in the president's mind, it's not 11. It's down to 2 or 3. So I think he's got an inclination in terms of who he wants.
Yeah, I've been reading that lately too. So, all right, we'll leave it with this for all the folks out there. What's the one thing or 2 things that can happen in the next 3 weeks that may cause them not to cut rates? Do you think at any point there's any number that can come out, or is it that first number you were alluding to earlier? What is the one thing or 2 things where you could say, hey, Chairman Powell's going to take one more look at this thing?
So you had the hot PPI, right? But if you look at that number, the heat was coming from the services side, so not necessarily tariff related. You'll get PCE next week. That will certainly be important. The employment number is going to be important too. If that shows weakness, it will solidify 25. And then it's interesting because once we get past that number, we get that CPI print in September, but that CPI print is going to be during the Fed's blackout period. So we'll be watching that number as well. So look, I think it's still a very live environment now for September. I think the market is right to skew toward 25. I think Chair Powell certainly opened the door to 25 in September, and we're going to be watching all the data. I mean, I think it's all on the table and it's all live at this point. And some of that data, like I said, we're going to get some of this data in the Fed's blackout period, which could make it a little interesting.
Yeah, well, thank you for taking the time. I wish you much well-deserved rest here next week. I know how we think. It was not probably not going to be as much rest as people think we have, but I know you'll be watching it, which is a good thing for us and our clients. And I always say this: I'm on the road quite a bit, and I must acknowledge to you, clients are really enjoying talking to you and reading your stuff and asking for more and more meetings. So although more demanding on you, I'm glad that we're able to add that value to our clients and corporate treasurers and others. So thank you for that. And, wish everyone a nice and safe Labor Day. Everyone get some rest, and we'll be right back at you here a couple of weeks after digesting all this with Greg. So Greg, enjoy, bud. And as always, I enjoy doing this. Have a great weekend, buddy.
Thank you.